Hi everyone, I am Adil and welcome back to the benefits of retirees. If you're retired or planning for retirement, this video is a must-watch. Major changes to pension rules are coming in 2025, and they could affect how much money you actually take home each month. From new tax rates to updated exemptions and payment dates, we'll break it all down in simple, easy-to-understand terms. By the end of this video, you'll know exactly what to watch for, who's impacted, and what steps you can take now to stay ahead. Grab a notebook because this update could directly affect your financial planning for the year ahead. Have you heard? Starting in 2025, major changes to pension taxation could reduce your net retirement income unless you take action. In the next few minutes, I'll explain the new tax rules, who they apply to, and how much your benefits might change. Whether you are planning for retirement or already drawing your pension, this update could directly affect the money you take home, so it's important to stay informed. Over the past decade, governments have gradually adjusted how pension benefits are taxed, but the changes coming in 2025 represent one of the most significant shifts in recent memory. Until now, pension income in many regions has benefited from preferential tax treatment through lower tax brackets, exemptions, or special credits. The new rules aim to standardize pension taxation relative to other income sources, which may reduce relief for many retirees. In this video, I'll break down exactly what is changing, who it impacts, and when these rules take effect. I'll also show you how to check whether you qualify for exemptions or transitional protections and what steps you can take now to avoid surprises in your 2025 pension statements. Keep in mind that tax laws and pension systems differ by country and region, so this is meant as a general guide. Always confirm specifics with your local pension agency or tax authority. The first major change is that, starting January 1, 2025, pension income above a new threshold will be taxed at standard income tax rates instead of preferential or reduced rates. In many areas, the pension deduction, or exemption band, is being reduced or removed entirely. Previously, you might have had a tax-free pension band of $500,000, with only a lower marginal rate applied above that. Under the new rules, that band could shrink to $200,000 or disappear entirely, meaning a larger portion of your pension will be taxed at full rates. Not everyone will be affected in the same way. Full retirees drawing their complete pension are likely to experience the biggest impact, while partial pensioners earning income from other sources such as consultancy or rental income might be pushed into higher tax brackets. Low-income pensioners may retain some exemptions or reliefs, so those with modest pensions might be less affected. Veterans, disability pensioners, or public service retirees may have specific carve-outs or exemptions, but only if legislated. If you currently benefit from a generous pension deduction or tax credit based on age or service, check whether your status will still qualify under the new rules. The effective date of these changes is January 1, 2025. Any pension payments from that date forward will be subject to the new system. Many jurisdictions provide a transitional period or grandfathering protections, allowing existing pensioners to retain their old benefit levels for a fixed period before fully moving to the new tax rules. Annual adjustments may also apply, as tax authorities often index thresholds or credits each year, so the impact could grow over time. The first tax return reflecting these changes will typically be due in mid-2026, for the 2025 income, so be prepared to report any differences. To understand the potential impact on your pension, consider this example. Suppose your gross annual pension is $800,000. Previously, $500,000 was tax-exempt, and amounts above that were taxed at a reduced 5% rate, resulting in a tax of $15,000. Under the new rules, only $200,000 may be exempt or possibly none, and the remainder is taxed at 10%, resulting in a tax of $60,000. This means your tax liability could quadruple in this simplified example, significantly reducing your net pension. If you have other income, The additional tax could push your total income into an even higher bracket, adding more tax. To check your personal impact, consult your country's pension authority or Social Security office for detailed guides or FAQs. Ministries of Finance or Revenue Services often publish draft regulations or budget documents outlining how pension income will be treated. Official gazettes or tax notices may also provide legal details. Many pension agencies provide online calculators to project changes in net benefits for 2025. Look for transition letters or opt-in forms for special reliefs from your pension office. In summary, the tax burden may increase for many pensioners, exemptions and credits may shrink, and transitional protections may help ease the change but only for a limited time. The effect will depend on your gross pension, additional income, and any special status such as age, disability, or veteran status. Now is the time to gather your most recent pension statements and other income records, use official calculators to estimate the impact, and consult a pension or tax advisor if possible. Stay alert for announcements from pension authorities so you don't miss deadlines or opt-in opportunities. This update is important because it affects your net take-home retirement income, which is central to your financial security. Even modest increases in tax can reduce purchasing power over time, especially when combined with inflation and rising living costs. Stay informed, plan ahead, and take proactive steps to protect your retirement income. As we close, remember that these pension changes in 2025 are not just numbers on paper. They directly affect your everyday financial security. Staying updated, checking your eligibility, and planning ahead can make a big difference in how much of your pension you actually keep. If this information was useful, don't forget to like, share, and subscribe so you never miss future updates. Thank you for watching, stay informed, and take care of your retirement planning.